In this video, we're going to go through a scenario where we have two companies. ABC Company is going to be the seller and XYZ Company is going to be the buyer. So ABC Company is going to buy widgets and then resell those widgets to XYZ Company. And so we're going to do the journal entries from the perspective of the buyer, the seller and the buyer, so you can see exactly what's happening side by side. So if you think about it, if I purchase widgets or books or whatever it is, and then I sell those books to another company, then I have journal entries, and the company that I sold the items to also has journal entries, and those journal entries should be similar, right? So we're going to walk through the process of doing that. This is also part of an inventory handout, right, that I will post in D2L with the sections that I went over, right? So you'll see inventory handout here. Here's the sections at the top that I went over. And also I have the journal entries for the purchaser and for the seller, right, under the perpetual system. So remember, these are perpetual system journal entries, okay? All right. So to start off, I also have some T accounts here for ABC Company, the seller, and XYZ Company, the buyer. And most of these T accounts are empty except for cash. We're going to assume that this company, ABC Company, starts with $100,000 in cash in the bank, and XYZ Company starts with $10,000 in cash. And that's just so we don't end up with a negative cash balance, right, when we go through these transactions. So we're going to go through the journal entries and post those journal entries to the ledger, and you'll see the impact of that. So you should become familiar with these accounts, right? Inventory, accounts payable, sales revenue, accounts receivable, cost of goods sold, delivery expense, sales returns and allowances, sales discounts, etc. So we're going to use these T accounts, and here for the buyer, we're going to use these T accounts, and we're going to see the impact for these items. And so you may want to go through this video, at least for the first time, slowly, because some of the things may be new to you. So in this scenario, we're going to have the seller, ABC, sell to the buyer, and the buyer is going to take advantage of the discount. So you offer a discount to the person you sell to, they can take the discount or they cannot. So this is going to be a sale on credit with discount taken. All right, so let's go ahead and go through these entries. So here's the scenario. I'm going to do the scenario, and I'm going to do the entry for the seller and do the entry for the buyer. Again, ABC is the seller, but before ABC can sell, ABC first has to buy, because remember, what is inventory? You buy something that you then resell, right? So ABC purchases 20 widgets for resale, paying $2,000 in cash, $100 per widget. Okay, so ABC buys these widgets and buys it with cash. So what are we going to debit? We're going to debit inventory, and inventory is the same thing as merchandise inventory. If you debit merchandise inventory, inventory is the same account. And then we're going to credit what? If we paid with cash, we're going to credit cash. So we're going to debit inventory for $2,000, and we're going to credit cash for $2,000. All right, so I'm going to go over here to ABC, and I'm going to debit inventory for $2,000. Now notice the balance in the inventory account. I'm going to assume the inventory account is 0. The balance goes up to $2,000, and then cash, here's my balance in cash. I'm going to credit cash for $2,000. And then when I do that, you'll see the cash balance goes down. And that's just because I have the formulas in here. And this is exactly what happens in an accounting system, accounting software system. When you do these entries and post it, it adjusts the account balances. So now my inventory has $2,000 in it. My cash went down by $2,000. And so that's my entry. Now think about it. What entry is XYZ Company going to have, right? What entry are they going to make? So ABC Company buys these widgets. These widgets are now sitting in ABC's company's inventory, right? Does XYZ have to make an entry? No, they do not. In fact, XYZ doesn't have any entry because XYZ is the buyer. ABC at some point is going to sell these items to XYZ. But at this point, ABC hasn't sold anything. All ABC did was buy the items and put it in inventory, and that's it, okay? So for this, the journal entry on January 1st, 1/1, there's no entry to XYZ Company because XYZ is going to buy these items from ABC. But on January 1st, there's no purchase. XYZ didn't make a purchase, all right? So now ABC purchases 10 additional widgets for resale on credit for $1,000. So the first transaction was a cash transaction. The second transaction was a credit transaction. So ABC purchases these 10 widgets, but now on credit. all right? So what's gonna be my entry? Well, these are gonna go into my inventory because these widgets, these 30 widgets, the 20 up here and then the 10 here, these were all purchased for resale, right? So they're gonna go into my inventory, so I'm gonna debit inventory. And then what do you think the credit is gonna be? This is gonna be debit for 1,000. Okay, what am I gonna credit? Am I gonna credit cash? No, I'm not, right? I'm gonna owe for this, so I'm gonna credit accounts payable, okay, for 1,000 bucks. And I'm gonna go over here and I'm gonna put in inventory for 1,000. You'll see I already have the dates in, okay? And I'm not crediting cash, I'm gonna over here and I'm gonna credit accounts payable for 1,000. So this $1,000 in accounts payable is the inventory that I purchased, this $1,000 in inventory, and over here, this cash is for the cash transaction, right? So I have two inventory, $3,000 worth of inventory, $2,000 that I bought with cash, and $1,000 that I bought on credit. So my inventory has $3,000 in it. What's the entry for XYZ? What did happen to XYZ? If you're ever confused about an entry, just ask yourself, what did XYZ get? What did XYZ give? XYZ didn't get anything. XYZ didn't give anything. The only thing that happened is the seller just bought the items from their supplier, so there's no entry also for XYZ company. Okay, again, ABC company is going to sell to XYZ company, but before ABC can sell, ABC has to buy it from their supplier first, right? Okay,